Rishabh, hi, good to have you with us. How have you been?
Hi, thanks, Ashu. Great to be here. I'm doing well. How about you?
Doing very well, Rishabh. Excited to have you and host you, today for this session on Asia Tech Journal, and largely because family offices in the last couple of years have played a very critical role, right? They've in a way been they've brought a massive stability at a foundational level across many startups, right? They've very actively participated in the funds. We've become a very fledgling ecosystem, right? And you're leading one of the marquee family offices in the country, right? While of course you continue to invest in businesses, right? But I think more importantly, you're bringing in a lot of other infrastructure which is required for many of these businesses to scale, right? And I think that becomes a very critical thing, right? And like I said, excited to have you in the conversation. I'd love to start this conversation, Rishabh, with a quick round of introduction to all the good work that you've been doing, and from there on we start talking about Sharpp Ventures and portfolio and the thesis that is at play.
Sure. No, thanks again, Ashu. Pleasure being here. I think if I can just introduce, share a little bit about my background, what I was doing, and then I'll come to Sharpp, if that's okay.
Absolutely.
So, Ashu, our parent organization is Marico, which is founded by my father, and we have another sister concern called Kaya. So, which is a chain of dermatology clinics. And I worked in Kaya for 3 years. So I came back from the US, I finished my undergrad. I came back in 2007, it's a while back. And I worked for 3 years in Kaya, and I did a whole bunch of different things within there. But I got a perspective of, what it is to run a service business. Online was just kicking in right now at that point in time, and we started getting leads online. And maybe we were pioneers back then, definitely not now when it comes to digital. But back then at least we were on top of our game when it came to just getting a top of funnel leads and converting them to footfalls, from a footfall to appointment, from appointment to conversion. And we had got that sort of playbook, we were getting that right back in the day. And I was part of that whole digital transformation at Kaya that we were doing back then, and understanding different aspects of the overall business. And I worked in projects, I worked in service quality, and it's a chain. We have before COVID, we had 95 stores. Today we have 75 in India, and we've got 25 across the Middle East. And I think it's still cutting edge in terms of its overall thought process, but it's extremely professionally driven. And I wanted to do something outside of the business. So that's when I had actually told my father that, listen, I want to step out, and I'm getting siloed into specific divisions, and I want to get a broad-based understanding of the business as an entrepreneur. And he said, listen, I don't know what to do, but then don't do this, because you can make more you can make more mistakes with lesser amount of money, and I can't afford to have this business deal with your mistakes. So I actually stepped out, and my mother had a hobby of handmade soaps. So I said, listen, I'll help you build that out, and it was truly a mom and pop shop. And I sort of completely bootstrapped, and just me. I pretty much hired one other person, and we started off, and it was a great journey, because it was a school of hard knocks. Learned a lot along the way, and I from a soap brand, I realized that you need volumes and you need distribution, and the moat that consumer good companies have is distribution, and I couldn't build another Marico in 2010. You can't go and do that. So then I realized, let me premiumize it, and that's when I got into the whole aspect of online, and premium consumers, and brands like Forest Essentials and Karma had just come up then. If you remember, or if you have other women in the family, or your spouse, and the kind of premium consumption of that had just started in 2015, and I built my own brand then. And I realized along the way, because I started investing, I realized I enjoy investing more than I enjoy operating businesses. And luckily I got my break, because I was able to sell the business in 2020, just before COVID. And thanks to that, now I'm full-time into Sharpp. So I'm full-time into Sharpp from the last 2.5 years, but part-time since 2015.
Interesting, Rishabh. That's some introduction, right? And I think I think this entire piece of doing it by your hand, right, and kind of scaling a business, I think just kind of gives you a very different kind of an understanding, right? I think the consumer spectrum in a country like India is just so complex, right? I think that that building yourself and kind of scaling that piece just helps you understand consumer mindset better, right? It's something which is very critical in your job in the current in the current point of time, right? Now, Rishabh, we're going to talk a little about Sharpp Ventures, right? Now, you have an absolutely spectacular portfolio. You're also an LP in many funds, right? Why don't you take us through that journey and tell us a little bit about the pieces of your investments that you make?
Yeah, sure. No, it's a very interesting question. What you said earlier was also super interesting in terms of the value add through the operational learnings of a business. So, but let me just start with the journey. So first, I wanted to get into. I was very excited about waste management, and I asked my father, "Listen, can I go and invest in companies who are doing this?" And and at that time, the dividend payout ratio of Marico had just increased. So he is a true blue entrepreneur himself, and he said, "Listen, you don't need to put money in elsewhere. I know Marico. I know the kind of returns you're going to get. You're guaranteed. You have a guaranteed return here. So put the money back into Marico." That's when I said, "Hey, listen, can we look at diversifying and not putting all the eggs in one basket?" So he sort of bought into that. Luckily for me, he bought into that. And he said, "Fine, you go out and you see where this whole investment goes." So I started with waste management. We actually still till date don't have any investments in that category, in that sector. But it just created a sort of a ripple effect in terms of investing, and we did a whole bunch of funds from 2015, from say a Bloom to in Bangalore to an Xfinity, which is a tech fund, Indus Age. We done an incubator fund called Ant Farm. So there was a lot of stuff that we did, and back then we said, okay, fine, let's just learn from them and let's just dip our toes in the water and see where this takes us. And through that there was a lot of learnings in terms of, okay, fine, we got through the LP meets and through the annual day meets. You could meet with other entrepreneurs, what they were saying. You got it just created a level of excitement, seeing that, okay, fine, there's something like this that's there. There's an ecosystem that's there, that's growing, and there are other investors also out there that are thinking in the same lines of, okay, fine, there's this whole old world economy which is run on SMEs and just listed, right? There's only two ways of thinking, right? And now there's a whole new asset class that's coming up, and that just sort of opened my eyes. I was not a finance professional, so I actually didn't know as much about the whole unlisted space, about venture capital or private equity. Those were new words for me. And I think through that journey of just engaging with the funds, we actually started co-investing alongside them. So we did a whole bunch of co-investments alongside those funds. And so, stuff like your term sheet, your shareholder agreement, you got a lot of support from the specific funds and specific mentors that I had also in the industry, who really supported us and said, "Listen, Rishabh, we're there, and you don't worry, we'll make sure that your the terms that you have are fair, but we'll be there to support you." And through that we got some confidence, because some of those businesses, we invested in them and they were sort of looking up, and that just gave us more confidence. And luckily for us, we had the liquidity to invest further. So then through that, so the stage moved from investing into funds to co-investment to direct. And it's the direct part of it then where, as you were rightly saying, Ashu, the overall learning that I had from my 10 years in just become an entrepreneur, that actually led me to two of our best investments in our portfolio. So everything from early stage Nykaa, it was because I saw myself as a skincare entrepreneur, and I saw the need for a platform like this, right? Because I could barely sell on Amazon, and there was no other vertical play that existed. And you in your own backyard, you can do research, right? You talk to the folks in Marico, talk to the folks in Kaya. Luckily for us, Mrs. Nair, who's a phenomenal founder, came and she spoke to us, and it was phenomenal because here there was a team who was completely new, who didn't have the baggage of the industry. Otherwise folks like that, they'll go and they'll hire people from traditionally from the consumer space. Here she hired a very young team who had not even ventured into that industry, and I think it's that completely growing ground up first principles that actually led her to build what she's done today, and we were lucky to be part of that journey from a very early stage in Nykaa, and those are one of our sort of that is our best bet till date, and then we have another business called Mama Earth, which is started as a mother baby brand, and now today it's an entire personal care brand or a house of brands, and that's the other sort of investment. And again, that's I would partly take that in terms of how I was a skincare entrepreneur, and I could sense those opportunities, and that's what led us to invest in them, because we saw the potential. And then you had folks like Fireside, where Anchor LPs in Fireside, and they had in Mama Earth, they were there, and there was a big stamp approval from them, and that actually also helped us make that. They brought Varun to across to meet us. My father was advising all the Fireside entrepreneurs at that point in time, and we was like, wow, this is it, and we had everyone from Aman to Bala of Vadham to Varun of Mama Earth, all coming and meeting us, and it was today obviously the tables have turned where everyone's after them, but at that point in time it was a different ball game altogether.
No, I think I can completely understand, imagine, Rishabh, but I think those were very, very difficult times, but I think the market has changed in the last 2.5 years, right? While of course it's become just so much more digitally savvy, but I think it's becoming equally complicated, right? Possibly how it was early on, right? And these are very interesting times. In fact, this is something that I would want to discuss, as part of this conversation. And now, is that the last 2.5 years have been they've been transformative, right? We never imagined or fathomed the kind of adoption that we've seen in the last 2.5 years, right? From a technology standpoint, from a consumer standpoint, right? Now, what has happened is that so essentially, we've become slightly more risk-prone, if I can call it that, right? And that's largely because the consumer's influence has changed dramatically, right? Now, you cannot, because there's just so much of content flying, right? And everybody has become content first in many ways, right? Be it entertainment, be it informational. It's something which is led into a very, very competitive environment for businesses in general, right? For many of these brands that, for example, have existed, right? You really cannot be 100% sure of the relationship that you have with the consumer, right? Because the choices are many, the preferences are shifting. They have today access to a lot of global content as well, right? In fact, there is an entire layer of e-commerce which is now getting built, largely empowering and enabling this cross-border trade, right? So, what's your sense of it? How do you see this newer, shift? A consumer which wants everything and in a click of a button, right? What's your sense of it? How do you see that?
Yeah, no, I think it's here to stay, right? Q-commerce is going to be something that, if you're just especially talking about, we can segment it out, but if we just start with Q-commerce, I think it's here to stay, and consumers will want deliveries within 24 hours. And right. There are multiple today they're burning capital, and you get memes saying that, okay, fine, you're putting millions and millions of dollars in Q-commerce, but basics are still not met in the country. So at the end of the day, if it's a consumer need, and you can literally see it in the metrics, right? If goods take more than 5 days to deliver, you instantly see returns. And on portfolio, we've got a portfolio of a digitally led dermatology business where after doctor consultation, they choose a sort of package and of products and which is prescription based, and those products then reach, and sometimes it's in Northeast or sometimes it's in specific geography. It takes just much longer to reach than other places, and there's instant you can see the and it's all, most of it would be COD as well, and the return ratios, the RTO is very high. So
Right.
and it's just a function of the time to deliver. And if your turnaround time with your courier vendors is changed, it just changes exceptionally. And we've seen that across the portfolio, where that is a sort of a north star metric that they're looking at, where you want your tats to be just very high, and just to ensure that there's no return, the RTO, return to vendor, is just not, the numbers keep going down, because that's a big burn.
Interesting. Rishabh, a large part of your portfolio is in the D2C segment, right? Now, D2C again has gone through a massive shift, right? When 2020 happened, of course, this is something which is touched each one of us at a personal level, right? But I think what became extremely visible and powerful, right, was how a brand could go out and build a very, very strong relationship, right? And your channel of acquisition continues to be the same. While of course homogeneity was another piece which was kind of building and playing out, right? What has happened is that there are a couple of house of brands that have gotten built in the process, right? They become very, very large, right? I mean, Marico is one of those original house of brands, right? And I'll take the liberty of calling it, right? But these are players who come in and who made it difficult for the younger brands, right? In the process, right? The cost of acquisition is kind of gone through the roof. This is something that is the talk of the town, right? A lot of these, for example, early stage brands, their existence is questionable. Will they survive? Will they survive, right? Largely because the cost of survival is essentially consuming or being carved out of working capital requirements, right? And a research development requirements, right? Which essentially means their ability to cultivate and identify newer opportunities is just so much more limited. What's your sense of it? How do you see this entire, for example, this shift of having many brands to come up in the market, which is like India, to essentially it becoming favorable for a few, right? What's your sense of it? How do you see this complexity which is emerging?
Yeah, it's an interesting play for sure. The verdict is still not out there, right? You have folks like Mensa who've raised a couple of $100 million, and you have 10 Club, even for the multiple folks like that, and which you can just categorize into that Thrasio model, house of brands approach. And I do think there are positives out there, because they are able to see, they have the firepower and the bandwidth to identify brands which have brands get created because of a few things that builds a brand, right? In terms of the overall positioning, the name, the ethos, and the ability that some of these Thrasio or Mensa led models that exist out there, house of brands model that exists out there, is being able to identify the best winners. Because the challenge is that you can't, that the team, the CXO team, right? If you need a performance marketer, you need a social media, you need a content creator, you need a growth hacker. And if you're running a small brand and where your CACs are very high, you're going to spend on your team. Even if you're giving the team ESOPs, you have to give them some fixed variable and some fixed, some compensation, right? So I think the ability to be able to build that middle layer and absorb all the costs, right, with a top tier team is what these house of brands have. Which the smaller guys don't. So I think that you will have of course the house of brands will be significant competition to these smaller players, but it's within those smaller players there will be some who will say, no, we want to build on our own and we'll want to scale on our own, and they'll go through their own struggles, and they will be their own independent brand. And you have a whatever, something like a Neiman Shoes, you name the category and you'll have a some sort of category leader in that who's not part of the house of brands model. So their ability to stand out and face the test of time, funding, the share of knocks will definitely be much more. But I think their growth can also be pretty dramatic and more long term. With the house of brands, it depends on multiple other aspects, and some good brands can get killed because of that. but
Sure.
I think that the folks who just stay true to the game and have the gumption, it's luck. There's so many things to it, right? To stay the course, I think those single brands will actually be standout performers, and we can see it in our own portfolio when they've scaled and they've just said no to they've gone past the stage of house of brands, and they've said, listen, we are happy to stick it out on our own, and they've crossed the 100, 200, 300 crore mark. And then by then it's more PE style funding that comes in, and it's a different playbook as opposed to the earlier stage stuff that most of these house of brands sort of businesses do.
Interesting. But Rishabh, do you think it's possible? I mean, going forward, is this going to be possible, right? Because literally ever since, for example, say House of Brands came in, I mean, the entire excitement that was there in the D2C category, and while the excitement continues to be there, right? There are many people who are experimenting, who are trying. There's small bits and pieces of funding which is also sort of going in, right? When you look at institutional funding, right? Institutional funding is very inconsistent. There's just about a handful of players who've stepped in and supporting these businesses, right? Capital is a key requirement, especially when you're a digital ecosystem. You're acquiring from a digital ecosystem, right? And that's neutral to all, right? It's a function of money in the bank, right? What's your sense of it? Do you think standalone brands which will get built large enough to sustain the onslaught that they could possibly eventually have from House of Brands? Or do you think eventual exit strategy for everybody is going to be that scale to a certain point, and eventually House of Brands will sort of come in and buy it out, right? What's your sense of it? I mean, is this even possible to create a brand large enough to beat that?
Yeah, 100% it is. 100%. There's no doubt that's it's going to happen. I think the entrepreneurs. It's very difficult if you just. I mean, from what I understand, and I mean, I've been an entrepreneur myself, but when the going is good or bad for that entrepreneur, I think the last thing that he or she wants to do is I mean, unless that's the end in mind is to sell. They will probably only sell when they realize that listen, I can't compete with the CACs. I can't. There is this is my last resort, and I have to. If I don't do this, I can get eaten by them. So rather than getting eaten by them, let me just go and be part of that ecosystem. At least there is an exit for me. At least there's an exit for my investors, and I can maybe I can join the team. So different house of brands have different models. Some is outright buying. Some they'll allow them to be on the operating the business. So that depends on brand to brand approach of those house of brands. Business to business. But as a single entrepreneur or whatever, a team of entrepreneurs with that one brand, for them, I think that to me at least that would be almost like the last sort of resort, because they'd want to build by themselves, right? This is their hard work, their blood, sweat, tears that have gone into building this out. They'd want to scale this. They'd want to do it by themselves. And I mean, funding definitely exists for them. And we're seeing consumer funds, and we have a lot of respect for a lot of. There's a few consumer funds that we have a lot of respect for, and you can see the numbers, right? I mean, you have brands within 1 year, 2 year, 3 years, they become like, your brands are 300 crore today. I heard of a brand which is 300 crores. It's a soft drink brand in Chandigarh, in Punjab, in Haryana, and they do Jeera soft drink, right? It's 300 crores in 3 years. It's unbelievable, right? You have brands based on identity, and where it'll shock you the kind of business that they're doing and the kind of scale up they're doing, right? It could be certain groups. I mean, fine, we're in India, so Ayurveda is very important, but you have other segments also. You have halal right. Beauty is another space, right? So I mean, you will see truly across categories brands emerging in everything from home care, women's health, personal care, obviously, to, I mean, you name it. I mean, you have a Vadham who's come into teas. Who would think that a tea category would be able to build this? So coffee, there's so many coffee brands coming up. I mean, so across food, beverage, cosmetic, home, personal care. I mean, you're seeing it happen. I mean, and it's only going to get more and more exciting to see like emergence of brands being built ground up and sustaining over a long period of time.
Very interesting. Rishabh, I love your enthusiasm. I love your enthusiasm, right? I think that energy is possibly reflecting in the kind of portfolio that you have as well. Rishabh, I'm going to move into talk more about the investment thesis that you have, right?
Yeah.
Now, when I look up the information which is available, right, around Sharpp Ventures, there are a bunch of things, right? So of course, we talk about leadership, right? Something which is acquired by building the business firsthand, right? By your father, and that's something which is available for the portfolio companies, right? There's a lot of flexibility, for example, that you make available. There's a lot of infrastructure which you were kind of making available, right? Something again which becomes a very strong plus of sorts, right? One thing that stands out is a mention of patient capital, right? Tell us a little more about that. When I understand you're not a fund, right? So there's no compulsion. This is essentially family wealth which is now being deployed, right? So at a larger level, we of course understand, right? I want to understand it more from a lens of outcome, right? So when you're making these kind of investments, right? What's the kind of outcome that you would typically sort of look at, right? Here there is no compulsion, right? This is like I said, unlike a fund which has to justify its IRR, right? It's an extremely competitive space to be in, right? You're constantly benchmarked against the other. When you're doing it out of the family pool, it's slightly more comfortable, right? It's slightly different. The objective could be very, very different. Tell us a little more about that.
Yeah. So maybe if it's okay, Ashu, I'll start with what the vision is of Sharpp. So our vision is to be a renowned global multi-asset investment firm with a focus on venture, private equity, and public markets. So that's our vision. Coming to the timelines and how we're different from a fund is that our time horizon is not short. So because we're from the consumer space and because we know how long it takes to build brands, and in the consumer space we want to be more patient with our investments. So we believe that a 5-year, 6-year horizon is not good enough. We need a longer horizon. We need an 8-9 year horizon till actually some of these brands can become big enough to then potentially exit. So of course, like a venture, our objective also, number one objective is financial return. There's no question about that. But I think we want to be engaged players, and we're working towards being more engaged in our thought process. So everything from I think just being able to engage with the teams on a regular basis, potentially being on the board, either as either with rights or without rights, but just engaging. I think it's more about engagement that we want and learning. So yes, I do sit on the board of America or Akaya. So that's the big picture thinking that I get. Then I ran my own businesses from my 0 to 1 journey, and then out here in these businesses, again, there's lots you can learn from the portfolio itself, and there's a lot of cross learnings that can take place. So I think from across the board, there's value to be there's value to be taken from across different aspects of the scales of those businesses, which you can then cross-pollinate.
Right. Very interesting. Very interesting. Rishabh, would love to understand, what stage do you prefer to enter? What are the check sizes that you enter with? Are you doing early stage? Are you doing slightly late stage? You want to see a proof of the pudding. More maturity becomes, that gives you more visibility, right? And I think also a reflection of, what could potentially be the consumer base, right? Early stage or does not necessarily has some of those bits and pieces proven. In that sense. So what's the typical point, right, that you would typically
Yeah, thanks, Ashu. So it's a pre-series A. So there's some product market fit is there. The business is doing anywhere between 75 lakhs to a crore net revenue. You can see significant growth taking place month on month. So we don't come in at a seed stage because again it's just unproven at that point in time. So a little bit later on, but again not fully realized. So we believe that we have the ability to spot the pre-series A, series A kind of businesses where they're at that point of inflection where they can go on to being a 50 crore business. So they're at anywhere between 12 crores, anywhere between 8 8 to 25 crores, and they're going on to become a very soon they'll become a 50 or 80 crore business. I mean, that's the kind of stage that we come in at, where we say that we want to put in at least $1 million. And again, it depends on how competitive the deal is, and if there are other VCs on the cap table who want to get in, we want to actually partner with the right quality VCs, because we believe that there's a value that's there to be got from them in terms of digital, e-com, D2C, and a whole bunch of other things. But we believe that we can also be a great partner out there in other aspects. So if digital is something that the VCs are actually supporting, and there are other parts, I mean, be it offline or be it HR or be it opening doors, thinking through the GTM strategy, or even thinking through brand. I think ability to add value through getting the right brand partners, the right tools to use for online, for offline. I think we have that, and we're building that muscle up with time. And we are also learning. I'm 2 years full time into this. We've expanded the team. I've institutionalized the team as well, because I've got to carry for my, unlike other family offices, I've got to carry for my team. So I'm building that out as well, just to make it a quality firm where I can compete with the right talent as well, and have great folks in the team who can really add value to the entrepreneurs.
Very interesting, Rishabh. Very interesting. Rishabh, I'd love to talk about global markets, right? So now, for many Indian startups are now kind of expanding into other regions as well, right? In GCC, for example, has been seeing a lot of traction, right? Aspirationally, we are definitely there, right? I think, and it's heartening to see, some of this movement happen, right? What's your sense of it? How do you see that, right? Are the Indian brands, and we're seeing some of them to do that, right? But of course, what we have is a much larger band of brands, right? Do you think, the brands are ready for those markets? Because the expectation of global markets is very, very different, right? Indian market is at a very different, point, right?
Yeah.
We are still coming out of, our first uses of products, right? We're now graduating into a savvier set of products, right? Being an urban market phenomenon, tier 2 and tier 3 is kind of growing up, right? Global markets are of very different nature. What's your sense of it? Are you particularly excited about that?
100%. I mean, I think the market is in India in terms of demographic. Where the demographic lies, it's in India. The volumes lie in India. The big wallets lie here in the Middle East. So the consumer spending is much higher here compared to India, where right. You'll have more. I mean, I just make it equivalent to like a sachet. A sachet format in India works much better compared to a big volume product out here, where the consumers willing to pay. So I think out here, even the market is much smaller. If you take Middle East, if you take and depend. Of course, it depends on the product, and I'm putting my CPG, my consumer products hat on, but out here the consumer is willing to pay much more money for a product, and you can get good level of stickiness because the platforms exist. So is the ecosystems there? I think everything from a Amazon global store to you have like Cloudtail equivalents out here. In Middle East, there's something called Asidus out here in the Middle East that exists, which is like a marketplace where brands can come and list themselves here, and then they sell multi-brand products out here in the Middle East, and the consumer out here is open to trying new things. And again, because of the geographical proximity, I think it's relevant. I mean, they say I'm sitting in Dubai right now, and Dubai is the best Indian city outside India, right? So that's truly there, and I think these are good satellite markets to get some growth from, and modern trade is very evolved out here. Compared to India, it's a very modern trade driven market, Middle East. So the potential is there, but for premium products, I don't think it's for mass products. It's not there. For premium products, it definitely exists.
Very interesting, Rishabh. Towards the end of our conversation, how we don't want such conversations to come to an end, right? Because there are many nuances that you can continue to talk of, right? But would love to understand what are the next 2.5 years like. Right? What are the targets that you set for yourself, for your team? What are the areas, for example, that you're particularly looking at? Would love to understand some of that because India has become a very different market, right? Businesses that are coming out of India are very, very different. There's a certain sense of homogeneity which is coming in, right? Of what you mentioned of Dubai, I think we've seen some reflection of, or GCC, right? We've seen some reflection of that in India as well. What are the areas that are exciting you and you think are going to be big bets and interesting bets to make?
Yeah, I think that there are a lot of exciting areas. One of the ones that I'm truly passionate about is climate change and sustainability. I believe that there are multiple technologies that are coming in, and I think we have no other option but to become just more aware of our own our own carbon footprints, and both consumers as well as businesses, I think, have a responsibility towards the environment and towards just conscious consumption. And I think the there are a lot of subcategories within that. That's a very large motherhood thing in terms of climate change sustainability, but it's something that I'm personally very passionate about it, in terms of everything from plant-based food and products is my personal passion,
Right.
but everything from the EVs to consumer products which take up lot less consume in a far better manner, in terms of
Right.
lesser plastic, or the alternative forms which are more naturally available in the environment. So that's one. I think the other, if I were to just dive a little bit deeper in, as a category, is home care is a super exciting category for the country and for me specifically, because I think there's a trend out there. They're the mass market brands, but there will become a masstige set of brands that will come in, and can you occupy that space through great founders who build great stories around brands. And the one of the other ones is another like a Nika, other vertical commerce. So
Right.
you will have horizontal will again go into vertical, and vertical will still go further. So you will have vertical, I think, platform plays for, like, say, electronics, appliances, for good food products, for just organic. And you're just seeing that play out in consumer habits when you're talking to colleagues, and you're seeing, okay, fine, those pioneers in terms of adoption. You're already seeing people saying that, okay, fine, I buy my product from XYZ, which is an organic store, and it's an organic marketplace where they deliver to my house. And fine, the price points might be high today, but tomorrow those with volumes, those price points will come down, and it'll just become more democratic. So I think the last thing is even digital distribution. So for offline. So this whole ecosystem play of offline, I think distribution is a very redundant the business where it's very heavy in terms of there are generations who do it one after the other, but it's a very manual business where you have to deal with loaders and unloaders. You have to deal with a big army of salesmen, and this whole thing will change with time. So when I say redundant, I mean that there's no digital presence out there, and it will get digitized with time. So, and it's already happening, and you're seeing that across the country. So yes, there's an Udaan, yes, there's a Geo, but of course there's going to be even vertical plays out there, or ecosystem plays, which once they crack the model, I think that'll be the new future for distribution.
Super. Rishabh, this has been an absolutely phenomenal conversation. A parting comment, any suggestion, advice that you would want to give out to many founders which are, who are out there, right? Entrepreneurship is one lonely journey, right? A word of, advice, suggestion always helps, right? What would that be if you do sort of one thing which you think is the most critical?
I think just taking help from the right people and not asking everyone. So being able to assess who's the right person to go to, because today founders have an ecosystem where they can go to advice to the right people, but truly figuring out, is that person the right person to go to? So being able to figure out, fine, who do I go to, who do I not go to, and then taking the call. I think that's critical. And sometimes, I mean, I'm seeing founders fumble there, and they go to anyone for advice on anything, and they take it to heart, versus just being able to assess what is that person's competency, and going, how expert is that individual who are going to for advice, how good is he or she, and then taking that advice to heart rather than just listening to what they say and actioning it out.
Interesting, Rishabh. Cut the noise, I think, is essentially what you're looking to. Rishabh, this has been an absolutely spectacular conversation. Thank you so much for taking the time out. Right, I think this is a great start to many more. We're gonna deep dive into certain specific sectors, right? I think what's heartening to particularly see, Rishabh, is that while of course you have this massive legacy of Marico, right, and the entire infrastructure which is kind of built around it. Sharpp Ventures has its own sort of a game plan, right? You have your own game plan, while of course you continue to look at that as a space, right? But you're looking at many other spaces that are going to be very critical in the overall scheme of things as we evolve into being a more connected economy, right? A more responsible economy, right? I think that's something which is happening, right? I hope this is something which becomes a model of reference for many other family offices, because for a lot of family offices, when we speak with them, I think one thing which very clearly gets highlighted in the process is it's very strategic in nature, and that's largely because there's a certain understanding that they have. I think what is important is to very clinically build a play that has its own path and journey, right? And just to diversify and de-risk, like you said in the conversation. Rishabh, this was an absolutely spectacular conversation. Thank you so much for doing this. It was a pleasure to host you.
Thanks, Ashu. Really appreciate it. Enjoyed it myself as well. Thank you.